It. Now, you did mention the CHIPS Act. That gets me thinking about chips. It's interesting that we have gone through the lion's share of big tech earnings, and everybody was very curious about how they'd perform and what they'd say about AI. But we are still more than 2 weeks away from the company that gets most of the attention on AI, which is Nvidia. And it is a stock that you continue to like. Everybody always asks the question about the run-up we've seen, whether or not this name is going to lose momentum and just got too hot. How do you think about businesses like this one?
It's a business I want to own, John, and not just because of the AI hype, but because there is so much fundamental strength at NVIDIA. We all know, right? NVIDIA makes the world's fastest chips. 40 quadrillion calculations per second, way faster than anybody else. That's the backbone of what makes artificial intelligence possible. But the story, John, is that NVIDIA continues to grow. So not only is NVIDIA innovating and continuously producing faster chips, but we're talking about earnings growth of somewhere between 75 and 90%. That's incredible, John. So you say to yourself, well, yeah, but NVIDIA's trading at 30 times earnings. Okay, fair enough. 30 times earnings. Is that expensive? Well, the S&P trades at 20 times earnings and is growing 10%. Or you can buy NVIDIA trading at 30 times earnings and growing almost 100%, right? 10 times faster. So yeah, I'm very happy to pay that 30 PE to own a business growing that fast.
Nvidia stock has been a Wall Street darling for quite a while now, and for good reason. The stock has roughly tripled over the past 12 months and is up more than sevenfold since September 2022. Thanks to this, many analysts have talked about how bullish they were on Nvidia and how the company still has more room to grow despite reaching outstanding peaks. However, not everyone on Wall Street remains enthusiastic about Nvidia. In fact, one analyst from D.A. Davidson thinks that Nvidia stock will plunge close to 28% over the next 12 months and has a major warning for all Nvidia shareholders. So, why does he think that? And will Nvidia stock really plunge? Let's find out in today's video. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to the video.
Can you still call Apple a growth stock? And if you can't, what does that imply for the multiple and for investors?
They aren't showing the trend line of being a growth stock right now.
And haven't for a long time.
No, they really haven't. And right now they're behind on all the trends. And they have been for some time, but they've gotten away with it for quite a long while. And so all of a sudden they're saying, what is their AI strategy? Do they have one? Are they turning to Google? Are they turning to OpenAI? Is that really the best that Apple can do? And right now, if I was putting $1 somewhere, I'm looking at Microsoft, I'm looking at Google, I'm looking at Nvidia. I mean, even AMD showed great results growing their MI300 product, and Qualcomm are showing some compelling opportunities at the edge with AI. I'm not putting $1 into Apple right now.
Analyst Gil Luria from D.A. Davidson recently set a price target of $620 for Nvidia stock, and that reflects expectations of a steep decline of more than 45% from the stock price as of the time of this video. This is a very strange prediction, especially when you consider the fact that the average price target for Nvidia stock on Wall Street is about $1,000. So, why is Luria so bearish on Nvidia? According to the analyst, Nvidia has potential trouble ahead due to a shift in spending by big technology companies. In particular, Luria thinks major Nvidia customers like Alphabet, Meta, Amazon, and Microsoft will eventually have all the GPU capacity they need. In fact, he told BNN Bloomberg in a recent interview that these tech giants won't continue buying chips for generative AI indefinitely at the rate they've been buying. This is because all of these companies have developed their own AI chips. For example, Google announced its new ARM-based Action chip last month, and Meta rolled its next-generation custom-made MTIA chip too. Additionally, Amazon offers cloud customers the option of using its cost-effective Inferentia and Trainium 2 chips to run AI apps, while Microsoft has its Maya and Cobalt AI chips. The analyst also points out that some big Nvidia customers are turning to the chipmaker's main rival, AMD. If you've been following AMD, you'd know that Meta and Microsoft have been buying AMD's new MI300X chip, which the company claims is better at AI inference than Nvidia's flagship H100 chip. Also, AMD CEO Lisa Su said in the company's latest earnings call that they've been receiving great feedback from customers and that AMD is working closely with its customers to strengthen their partnerships. Luria isn't the only person that's issuing warnings to Nvidia investors. In fact, there are others who think that Nvidia could become a victim of inflated expectations. So, let's take a look at what they had to say. Hello everyone, and welcome back to Investocracy.
Okay, let's talk through some of those names. I mean, we've heard from Alphabet, from Amazon, from Meta, all of them, the CapEx spend they're making. Are they building the reward in return for that investment from your perspective?
Absolutely. It's the number one thing that we have been looking at through this earnings season has been CapEx and how these companies are spending their CapEx. We wholeheartedly expected them to have a big CapEx number through 2024, and they're even talking about 2025. And this to us is the leading indicator of what's to come in AI, because they wouldn't be building this CapEx unless they saw the demand trends. I would remind you that during earnings season, both Microsoft and Amazon talked about how they were limited on capacity of GPUs. So this again, I mean, people keep asking, like, where is the application? Someone is using those GPUs. They're all used up already, the hundreds of millions that have already been spent.
According to Richard Hunter, the head of markets at Interactive Investor, the UK's leading flat-fee investment platform, Nvidia, could become a victim of inflated expectations from both the market and investors. He also thinks that the US and China tensions could hurt Nvidia stock, especially after it was recently reported that black market prices of the H100 have dropped in both China and Hong Kong. Similarly to Luria and Hunter, Aswat Damodaran, a renowned finance professor at NYU known as the Dean of Valuation, said that he likes Nvidia's business prospects but not its valuation, and set a price target of $436 on the stock, which is close to half the current price. But could these bizarre predictions come true? It's important to note that Nvidia, despite being the AI market leader, is subject to the laws of supply and demand like any other business is. So if the demand for its AI chips slows like Luria expects, Nvidia stock will likely drop. Luria told BN and Bloomberg that the higher the stock goes this year, the more it's going to fall next year, and this factor isn't currently priced in. And while he acknowledged that it could take longer than he expected, Nvidia's current momentum won't last indefinitely. However, there are multiple reasons why these comments shouldn't discourage Nvidia investors, and we're going to walk you through them right now. We'll also explore the opinions of other analysts who are bullish on Nvidia, so we can determine who's in the right here. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
And of course, where benefits from the desire for GPUs, it's got to be Nvidia, right? I mean, is that the number one play for you? Have you been looking at, well, AMD, or indeed looking at the design element with ARM?
Yeah, so I think a lot of boats are going to rise over the next decade, and a lot of boats are rising now. So will it be a winner-take-all market? It's not going to be a winner-take-all market. There will be many different winners. Nvidia is going to be the winner-take-most, however, and we are really excited about what Nvidia is doing in terms of not only software development, but how they're changing the network in order to make data centers more efficient. So they're reaching out beyond just chips into the enterprise networking and software as well. So that sets up a really great moat for them and makes us very bullish on Nvidia. So, for example, if you look at the performance per watt of the B100, which is Nvidia's newest chip, it's actually significantly more efficient than the older generations. And so as you move through time, I do believe that on a performance per watt basis, you end up getting more efficiency than is currently baked in by the market.
Where is the market getting too exuberant? Do you believe any view that the hype has made market capitalizations unsustainable in certain names?
I don't think the market is exuberant right now, and And everyone always asks, like, are we in a bubble? Are we in an AI bubble? And I would say it's much too early. This is very much like, it's revolutionary in terms of what is about to happen. So, I was just looking at the valuations across the Mag 7 this morning. You look at Meta. Meta currently trades at a 10% discount to the market on our 2025 earnings. Actually, it might be a 15% discount now that it's pulled back so much. That, to me, for a company that is going to change the way that we interact as consumers with AI and how businesses interact with consumers, is not an egregious multiple. You can go down the list with Amazon. Amazon doesn't trade at that egregious a multiple to the market, especially as they're showing leverage. You look at Microsoft. Microsoft, again, if you look at 2026 numbers, it trades at a 5% free cash flow yield. So to me, these aren't really set up as bubble-esque type valuations, and we're not terribly exuberant, especially after this pullback.
Before you start freaking out over your Nvidia shares, keep in mind that Luria is in the minority on Wall Street. In fact, out of the 38 analysts surveyed by LSEG so far in May, 21 rate the stock as either a buy or a strong buy. This is because Nvidia has a strong first-mover advantage in the AI chip market, and demand for its offerings is still really strong. This was made clear when Nvidia's Magnificent Seven peers reported their earnings, as they also happen to be its biggest customers. Meta, Microsoft, Amazon, and Alphabet have all indicated that their capital expenditure will continue at the current pace or increase this year. These companies plan to keep buying Nvidia chips, even though they make their own, which is why I think that some analysts' worries about these companies abandoning Nvidia are unwarranted, and this is an opinion that's shared by many analysts. For instance, analysts at Mizuho recently recommended Nvidia Stock as one of their top AI picks, thanks to the fact that Nvidia is the primary AI and data center player, and it will continue to lead the market as its upcoming Blackwell chips are way ahead of competition like AMD and Intel. UBS analyst Solida Marcelli also agrees on Nvidia stock being an attractive investment, mainly because combined capital expenditure from Microsoft, Alphabet, Meta, and Amazon is expected to exceed $200 billion this year, up $20 billion from a previous estimate. Right now, all eyes are on Nvidia as it prepares to report its earnings on May 22nd, and we all know how volatile stocks get right before earnings, so analysts being cautious about the stock isn't a strange thing. For its Q1 earnings, Nvidia expects $24 billion in revenue and an EPS of $5.52, a growth of 238% and 406% respectively. Additionally, these figures will be coupled with gross margins projected at 76.3% GAAP and 77% non-GAAP. This indicates that there's still more room for Nvidia to run, as this outlook surpasses the $22 billion in revenue delivered in Q4, indicating more robust growth ahead. Also, market expectations align closely with Nvidia's guidance, with a consensus anticipating net sales of $24.22 billion and a gross margin of 77.03%. To sum up, it's very unlikely that Nvidia stock will fall 28% anytime soon, but even if it did, it would be an amazing buying opportunity because Nvidia has a lot going on right now that would definitely boost the stock in the future. Nvidia has been enhancing its experimental ChatRTX chatbot by adding more AI models for RTX GPU owners. This update includes Google's Gemma, ChatGLM3, and OpenAI's Clip model, expanding the chatbot's capabilities. In addition to that, Nvidia's supplier SK Hynix is experiencing a surge in demand for its high-bandwidth memory chips, which are crucial for AI chipsets. The company's HBM chips are already sold out for 2024 and are nearly sold out for 2025, reflecting the booming demand for AI services. But what do you think about Nvidia stock? Is it a buy at the current price? And what are your expectations for Nvidia's earnings? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.